Cause and effect, Microsoft using a daily time frame. By quickly eyeballing this chart, we could be forgiven for thinking that the effect, the breakout, is far greater than the cause built. However, there is an advanced technique called length of line. Well, I shouldn't use the word advanced, but most people don't speak of length of line. But what do we mean? What do we mean by this? Well, if we take a piece of string and we place it over the swing highs and lows with the turning points within the trading range, and once finished, we unravel that string, we would have one large length of line. We push up, come down, push up, come down, push up, come down, push up, come down, up, down, up. We just roughly, we can do it like this, push up, and this would be our length of line. And unraveled, it would be, say, that long. So this is our length of line, which is this from our trading range, which is our cause. So the length of line represents the cause, which is the energy found within the trading range. Okay? So once the breakout occurs and we move, which is the effect here, we can lay this length of line across the price action like so. And then we can see from this energy being the length of line that the effect is actually smaller than the cause built, and we probably can go higher from the cause built. This is a useful and somewhat uncanny method that more often than not provides excellent targets. So the cause is the string within the trading range. It's the energy that it's built. And don't forget, this chart is a daily time frame within a trading range that has lasted 9 months. Therefore, the cause is significant. We've been pumping up and down, building energy for 9 months. And although the response, as we can see when we broke August, so nearly 12 months, okay? So although the response so far has lasted 12 months, we don't think in terms of duration, time with cause and effect. It's all about the energy from the cause, the energy built within the trading range. And we expect to see the same energy, remember the 1-to-1 ratio, in the effect as in the trend. Let me repeat that. The length of line is the swings within the trading range, and we can draw over this. Just imagine a piece of string pumping up and down, going with the flow within the trading range. Then we unravel the string, and this would be, let's call it lull, the length of line, which is the energy, which is the cause. Then we can use our length of line, the energy, and just place it roughly over the effect. Therefore, we can see that the cause built here is greater than the effect because we still have more length of line left over. Therefore, we know that the market has the potential for higher prices. Why is this useful? Well, if we're long from here and we look here and we're thinking, that feels about right, because most people, they think, they eyeball a trading range, say from the highs to the lows, and they think a move to here is proportionate, which is the same distance, which is incorrect. Well, we know it's incorrect. Why? Because the markets work with cause and effect, which is a universal law. If we take a trade from here, we don't think of getting out of here. Why? Well, because if you think of the length of line, we've only used probably that much of our cores built. If we unravel that, we could go like this. So we've got all this cores, which is energy, left over, which obviously equates to higher prices. So we're doing ourselves a disservice. And that's why it's important to recognize the cores built. And the length of line is a tool. It can be considered quite a crude tool. It's not picture perfect, but in the past, I've been very inquisitive and spent some time analysing this phenomenon, measuring the length of line literally to the nth degree, never again. And I was very surprised how accurate this was. In my mind's eye, it's very basic. It's a very basic, simple P&F count and incredibly accurate. And it has to be accurate. Why? Well, because energy is energy. Energy doesn't dissipate. Cause and effect is a universal law. It's physics. Of course, there are times where you do get mini trading ranges within the uptrend, which does mild accumulation. So you can take that into consideration to do a very precise guesstimate for a top. But you can use PNF for that. I mean, I remember a stock that built cores, as in it was in a trading range for 3 years, and it was pumping up and down and up and down and up and down, creating a huge amount of energy. And then once it exploded, I think the trend was going, it was rallied for 8 solid years. And what was interesting about this study was that for the first 2 years, it just rose. It rallied like this with very minimal pullbacks. So if you think for 2 years, this is the length of line for 2 years here, that is only 1.5 pumps up and down with it. That's only 1.5 of the length of line within our trading range. Ergo, we have all this time left, all this energy, all this cause left. So it's not surprising that it went straight up for years. Just to fully grasp this concept and make sure we're on the same page. This is our trading range, and let's imagine we have a weak rally, come up, come down, come up, come down, and then we break. And this lasted 1 year. If we unravel this, it would be, say, that long. However, if we have a trading range which lasted 1 year, so the same amount of time, and we went like this, penetrated here, penetrated there, come back, held, like this, and then we broke out. Look at the size. This, the length of line here, is huge. We have to unravel all these swings, and this would, you know, I cannot even draw how long this length of line would be on the chart. We would have all this cause built. So the length of line here is the energy is so much weaker from this trading range. Why? Because of the length of line. We only have that much to work with. If we have a mild trading range, then we break out, we have our guesstimate, our ballpark area, where we'd expect the market to consolidate and form another trading range. Why? Well, to build cause. But if we come here, the same length, and we pump up and down, like this, the length of line is the energy, and we could break out to here comfortably if we unraveled this. So we wouldn't take profits here. Why? Because we have all this cause left, or here. It's a guesstimate. We just want to work the best we can with it. It's a very, very handy tool. Extremely useful in the right circumstances. I don't use this length of line for intraday per se. Where I do use it is for swing positions. And if I'm established early within a trading range, I am aware of the calls built. I do not want to take my profits early. And if you're dealing with 4-hour charts or daily charts and you're in a trading range for 18 months, it doesn't mean you want to exit after 18 months because that's time based. We look to the length of line, the cause built. Good. Are there any questions? How do you know if you form a trading range after the initial cause trading range, it's not distribution? Good question. Well, let me think. Funny enough, we will be discussing accumulation next, but this is our trading range. And I think we said it spans 9 months. So what's occurring in this trading range is accumulation. There are well-funded players, syndicates, hedge funds, smart money, call them what you will. They are buying stock. They are accumulating stock. And they will say they will have an area, say between 48 and 52, which is around here. And they will have, say, a target to acquire £400 million worth of stock in this area, which takes them 9 months. So when it breaks out and we haven't used all the cores, it's highly unlikely that we'll form another trading range and it will become distribution. Why? Because this whole move here of accumulation is orchestrated and it takes time. It takes money. It takes a lot of effort to accumulate £400 million worth of stock. Hence why it takes over 9 months within a certain period. As soon as it hits 52 and 48, they'll buy. As soon as it leaves the area, they just leave it to the market and then it'll drop down. As soon as it comes here, they buy. Leave it, drops down, comes in, they buy. So every time it comes into this area, they'll buy it. Odds favour it's highly unlikely you'll have distribution before this cause has run its course. Very good question. It appears there are no further questions. On to our next study.